All right, everybody. So here, as you see on my iPhone, I deposit $107.80 into my account, and as you see here, there's a few trades I made: AUT USD, GBP AUT, also US 30 is one of the trades that I actually made most of the money. But as you see and continually see that there's other trades, other pairs that I'm also involved in. You have SPX 500, which is another index pair. I love trading personally. But if you look down here, you will notice that this is where most of my money was made with the US 30. I mean, I lost three trades straight, but however, pretty much two trades kind of brought me back to break even in a sense, and then I lost another one, $48.50. And from there, I kind of just went and demolished the market and pretty much made some great amounts of money, which then brought me to that profit of pretty much $1,078.41. And as you see here, that balance, very last one, I did withdraw $720. So yeah, this is a real account, guys. As you see here, it's 100% real account. There's nothing demo-ish or anything about it. I truly believe if you know how to trade little money, you should be able to know how to trade anything. That's simple. All right, so other than that, stay tuned. I'm gonna show you guys how I was able to make that money. All right, so basically, guys, I am going to show you how I was able to flip that small portion to over $1,000. Simple strategy I use. Basically, it's simple price action and market structure is what I look at when it comes to trading on a daily basis. All right, so we're going to head over here to this pair AUT USD, right? So what I am going to do is go back into time and exactly where I took my initial trade, and I'm going to basically tell you why I took this trade and kind of tell you a glimpse on basically just understanding market structure in a sense, right? So what we're going to do is start off in a daily time frame. So I already kind of pre-marked my zone areas, as you see here in the blue square. So first is first. I'll start off in a daily time frame, 4 hour, and then 1 hour, and then 15 minutes is where I do my entries. Okay, so basically what I will basically do in the daily time frame and also the 4 hour chart. So really the 4 and daily time frame, I kind of look at both the same, but I will find the major key levels, right? So what is a major key level? So to simplify it, basically it's an area where the market retested multiple times, either as a support or resistance. Either way it goes, it reacted off that zone area, which then act as support or once again resistance. So as you see here, this is a daily time frame going all the way back until April, February of last year, of 2019. Basically, I put this as a major key area for one big reason is because, or a few big reasons is because, if you notice here, so I initially had it put in this area. You can go as far back as if you want to, but you can kind of get a glimpse like, okay, yes, this is a major area. So as you see here, it acted as support and resistance. It acted as support and resistance in this area. And then also it did the same down here, did the same right here, did the same over here. And then guess what? It broke out of it. Then it also retested the zone area again. It retested the zone area, and it also retested that zone area again. So I consider that as a very, very strong major key level, right? Same thing also applies down here, as you see, guys. Now for me, I don't really like to say the phrase support and resistance as much because I would just literally go off zones. That's kind of how I trade, off of zones, market structure, and price action. But as you see here, this is a zone area, and the market reacted in this area consistently. So we have here, we also have here, we also have here, and also if you look down here, it acted off that as well. And then also another thing a lot of people don't know is that usually when it breaks a very big support zone area, resistance, whatever it is, it will usually be a big spike, usually. And as you see here, that's basically what you see and notice. So now that, since I basically analyzed and figured out the overall picture of where the market essentially will be hitting and kind of reacting towards, and then also essentially looking at the market to see if it's an uptrend or a downtrend. As we can clearly see, it's an uptrend. Reason why it's an uptrend is because it's creating higher highs. So I go into the 4-hour chart. You notice that we have here, let's do this. So you notice that we have a higher high here, lower high here, and then also another higher high. Let's see, another higher high, and then we have another higher high, and then another higher high. Now, one thing I noticed, and this is why I took this trade, we've been creating higher highs, right? However, the market was tempted to go above this previous high, but it never reached it, or it never closed above it. So what that told me is two things. It hit major key level, so it's acting off this major key level very well. Two, is not creating a higher high, so that kind of gives me a glimpse of either two things. It might be consolidating in this, and if it consolidates, usually it will consolidate in a range motion zone area, which would be from the higher high to the previous higher low, which was right here, right? So now basically two things that I'm looking at. I am looking to see if the market is going to be a downtrend. Now, I don't know if this is going to be officially that downtrend that's going to spike all the way back down here, or might head up. At the end of the day, all I know is that I am looking to hit one specific target area, which would be the previous lower high, higher low, which would be this area right here. Sometimes I get these higher lows, lower highs so confused because I say it so much and so fast. It's just like whatever. So forgive me if I'm like kind of doing that to you guys. But basically this is the area that I am looking to take profit, right? Only if it does what I want it to do. So what I'm looking for in the market is a few things. All right, so I'm now in the hourly time frame. So I see this is a huge pin bar is what they call it. So one thing that I'm looking for, if the market surpassed the previous higher low, which would be this right here, then I am going to be looking for some sales, right? All right, so let's go ahead and speed up time and see what happens. So as we see here, we have a bearish engulfing. I'm still not going to get in the trade. Yes, you can, but it's iffy right now, right? Because you're counter trending right now at this moment because it's still in the uptrend. So you want to wait until you get a confirmation that it's going to start going down. So I'm waiting on it to break this lower high or higher low, right? So as you see, it broke it right there. Okay, so let's see what happens now. Still breaking it. Okay, perfect. So now I am looking at this to get back in. So now I'm noticing that it's retesting it. So now what I'm going to do is head over to my 15-minute chart. And then from here, I am going to be waiting on my confirmations, which would be a bearish engulfing. It can be either a retest to the same level, which is considered a double top. That's what we will call it. Also, I'm looking at different confluences such as Fibonacci. I use my Fibonacci a lot. So I will use my Fibonacci from the previous high to the previous low. So I am waiting on it to get to this 38 area. If it does, usually sometimes it does not, guys. And this is why I'm telling you, sometimes Fibonacci, don't always just use one confirmation as basically what I'm going to tell you is if it doesn't hit 38, it's not going to be the end of the world to not take the trade, right? This is just extra confirmations for you to feel more comfortable in getting in the trade. I already had my technically I already had multiple confirmations on why I should get in this trade for a sell, and I haven't used my Fibonacci, right? So I'm gonna tell you why market structure is important and to under market structure, because if you can understand market structure to the T and understand price action, a lot of these indicators that you use wouldn't honestly, you really wouldn't need it, just because it has lags in the indicators, which kind of sucks sometimes. So when it has a lag, it can kind of prevent you from getting in a trade at a specific point. So back to what I was saying. So right now, let's wait and see if we get any type of confirmations, right? So as we see, wow, we have a huge rejection. A lot of sellers came in at this 15-minute chart here. And we have a bunch of sellers that came in here. So now this is kind of giving me an indication that, okay, maybe I should get in. Now you can get in right here, but for me, I'm still gonna wait just to see if anything's gonna happen, right? So let's see what we get in the next candle. Okay, so right here, this is still not the best for me. Let's see what happens now. As you see, it went back up. Okay, so this right here is perfect. So the reason why I didn't get in at this candle right here is because buyers came down too, and it's not a strong bearish move. So there's not a lot of sellers hitting the market yet. As you see here, the market went back up. So let's say if you did take the trade right here and you put your stop loss, you should always put your stop loss above the a couple pips above, just because you never know if the market could hit you out or whatever happens, right? But technically, you can consider this as a sniper entry. I mean, honestly, it could, it can't, I don't know. At the end of the day, I just knew what I seen. This was definitely a reason on why I should take this trade. So the reason why I took this trade is because I see a big bearish candle, which is also known as bearish engulfing, because it's basically overriding that bull, right? So it's overriding the bullish candle. So therefore, what I'm gonna do is get in the trade. So I got in the trade, put my stop loss above that previous, I would say previous lower high. So I put my stop right above here, a few pips above, and I literally wrote it down like what I said, guys. I wrote this down to this previous lower high, right? Or higher low, sorry. So what I am now trying to do is, as you see, the ratio is 3.72, so this is a really good trade. My risk to reward ratio is typically 2 to 1, 3 to 1. I mean, it kind of varies sometimes, but usually 2 to 1, 3 to 1. I really like those a lot. Just because what happens is, let's say if I lose one trade, and then what happens is I win a trade, you know, I'm in profit. You know, I'm not doing a one-on-one where I will lose and then win one, and I'm pretty much just got what I ate or whatever. So now let's go ahead and see what happens. So the market, let's go back to the 15-minute chart. So the market is in a standpoint where it's just going to start demolishing, right? So as you see here, now if you missed this candle, you can still get in. I would consider this as a nice entry too, just because one of my confluences right now tells me that my moving average has crossed over, so it's giving me a signal that it's going to be a downtrend. Two, also it's creating another lower high, right? So I'm getting multiple lower highs created. In the sense of that, I'm also seeing that this market is not, it just doesn't make sense on why it will go up in my standpoint. So it could do it, but based off my technical analysis and also my strategy, this is what I'm sticking to. Okay, so it's going down. It's going down. Yeah, let's go ahead and continue. Going down. Okay. So now another thing too, if you missed out on trades like these, never ride it when it's just hitting the market hard, because when you do that, guys, it could potentially just go up out of nowhere and then just take you out. So you always want to learn the patience game, right? So you always want to learn how to be patient, because at the end of the day, patience is key when it comes to marketing, right? So as you see here, it definitely had hit it. Now, if you guys are looking to, I usually don't like to watch the chart a lot, but typically what happens is this. So when the market, when I seen another pattern, a lot of you guys might notice, a lot of you guys might not, but once I seen this other pattern called the three white soldiers. Basically what it is three of the same candles moving in the same direction, which means like I have three red candles literally just demolishing the market right now. So what you could do is, once you see that, you can move your stop loss, right, to either break even. So if the market, because the market can do whatever it wants to do, right? But if the market for whatever reason decides just to spike back up, you didn't lose anything, right? So you're not losing anything at all. And that's the beauty of understanding how to manage your account. Understand how to manage your risk and rewards, because at the end of the day, if you can learn the fundamentals of risk and reward, which I will be teaching that in other videos and so forth, and also in my courses. But if you can understand that, guys, you can become a monster in the market, because really trading is about learning. Like, you really have to understand what are you going to risk to make to get as a reward, right? So essentially, if you think about it, guys, there was nothing I was losing at all at this point, because once I seen this, I was like, you know what, I'm going to stay in the trade. And even I took my stop loss, actually, just to get a few more bucks. I put my stop loss right here, just because this was the lower low. So I put my stop loss right here, just a few pips above it, because sometimes it will hit this lower low. But I did put it above it a little bit, which gave me a little bit profit. But as you see, it never had hit that, so it just went down. And that's how I won that trade. That trade definitely did some numbers for that. But that was great there. And to be honest, guys, that's pretty much how I trade. So, you know, essentially, like what I was telling you, if you go back into the hourly time frame, as you see, guys, this looks like a big range, big range area. So it's ranging right now. Honestly, I haven't noticed, or I don't know if it broke this. So it looks like it's breaking it now. So once again, guys, if you missed that trade, you could honestly got in right here, just because it created another lower high. And not only that, if you would have missed that, potentially you could have got in again if it would have tested this zone area. But as we see, it looks like it never. I don't know if it did. Let's see. It did. Okay, so it's testing it now. So, wow, look at that, amazing. So if you wanted to get in again, you can. Like what I said, guys, you really have to look at your 4-hour daily time frame and make sure it hadn't already hit a major, like a minor major key area. Because if this area right here, down here, is like the lower low, if this is a key area, then potentially for you to get back in this trade, it might be kind of pointless in a sense. But like what I said, usually you always want to move with the market, right? So another thing that I did, I actually took a trade down here, and I'm gonna tell you why. This was more of a scalp, right? So I noticed that the market was creating, it was retesting. This is also known as a head and shoulders pattern. You have your shoulder here, head, shoulder here. Usually, like what I said, I only trade when the market breaks out and retests the areas. So once I noticed the market, this was a range, it was consolidating in this area. Once the market had retested that zone area right here, I literally got in somewhere around here. I actually got in a 5-minute time frame, but I actually got in right here. My stop loss was so low, but I literally got in right here, guys, and I rode it to the next low, which was literally right here, and it hit that profit. So that's how I got in that trade. So like I said, guys, that's how I trade. If you want to learn more, feel free to like, comment, and subscribe. Also, make sure you follow me on my Instagram, Solo Network, and I will answer any questions you guys have. And like what I said, right now I'm in the process of getting my courses started. I will be actually doing free courses, and I also will be doing more mentoring courses as well, which would be a little which would be money that you pay towards that. But I also will be doing free courses, because I truly believe that honestly, a lot of this knowledge I learned myself came from just reading books, YouTube, and also one of my mentors too as well. But I will be doing free courses for you guys. Also, YouTube is a free source to watch my videos as well. But make sure you like, subscribe, and if you have any questions, feel free to follow me on Instagram, and we will go ahead and talk from there.